Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
This show is a proof to me that my insistence on doing podcasts without written questions in hand or a script is the right way to do it. I agreed to this show, a talk with Michael Crowl, CEO of $4 billion Austin, Texas-based UFCU, because I'd heard he had been developing an interesting strategic plan. At many credit unions, there are strategic plans, of course, but often they aren't interesting. Often, too, nobody pays any attention to them anyway. Supposedly, UFCU and Crowl, who has been at UFCU for 20 years and has been CEO since September 2022, were different. Indeed, they are. Indeed, Crowl is. Pretty quickly, we veered off the plan and dove into how this guy had risen to the CEO job at a very big credit union. He grew up in government housing. He worked his way through the University of Houston. And then he went into investment banking, earned a good score, and then he went into teaching math at high school. A few years later, he happened into a job at UFCU and fell in love with what a credit union is and could be for its members. And for him, too, to be honest. In the show, I even asked the hardest question to throw at a CEO. When did you decide you wanted to be CEO, and how did you get there? And Crowl gives a simple but honest answer. I even ask an even harder question. Is this your last job? You'll have to listen to the show all the way through to get the answer to that. It's a great show, and I had no idea it would turn out this way. But that's the magic of doing this work this way. Listen up. You have one of the most eccentric resumes I've ever seen for a credit union CEO.
It's quite different, isn't it?
Let me recap. You, 1995, you get an MBA from the University of Houston. You go into investment banking.
Yep.
You help a firm get some decent funding. You're brought in as CFO. Then you say to yourself, geez, I've always wanted to teach mathematics to kids. So you get a job as a math teacher for, I think, 2 years or about 2 years.
Right.
And then you get into credit unions. Explain this through line to me. I mean, obviously you're a CEO of a big credit union. You're a through line directed guy. I'm just not seeing it.
It's been an interesting journey, right? I think I can give you the very long version, which I know we don't have time for today, but I think frankly, it was for me, education was my means out of a way of, a life of what I'd say is very, very modest living. And so I pursued that. And as a result of that, I pursued a career in which I optimized for money. So I was really pursuing money, and did it for a number of years. Well, I learned a lot, certainly enjoyed that experience, and learned, as you can imagine, learned a tremendous amount. Enjoyed it, but at some point it really began to, there wasn't purpose in it. To me, there wasn't purpose. It was lacking connection. After 6-9 years of doing that, it really was about the opportunity to take a step back. We just had our first daughter, and I was looking at my life and saying, how do I want to spend, the years after this, right? And what kind of father do I want to be? What kind of husband do I want to be? And I had a lifelong dream of being a coach and a teacher. And I was fortunate enough to have the opportunity to go do that for a couple of years. And then I think there I reconnected with my true self in a lot of ways, of my authentic self, which was really about how do I connect and help with people, and coaching and teaching, and decided to get back into the professional world and for finance world, and came to UFCU for a job, frankly, as a way to reestablish the resume, and fell in love with the place, frankly. I didn't know this kind of finance existed out there. And so for me, it really was about an opportunity to, you know, as I got here, realize that, oh my gosh, you can actually do finance in a way that helps people. And I like who I'm doing it with. I like the purpose of the organization. And so it really, and here I am 20 years later. I had no idea I'd be here this long, nor did I think I'd ever be a CEO. But nonetheless, here I am, and obviously very, very thankful and glad to be in the seat.
I have to say, if I were a board member, I would get up and applaud that speech you just gave, because that's exactly the kind of person I would want working in my credit union.
Thanks, Robert.
Now, I might be a little more eccentric than other board members, but obviously yours thought you were a pretty good choice. So,
yeah, it's been a journey. It's funny that you mentioned that. I think our board did a national search using a large firm to conduct it, and they asked the executive team members at the time what were the characteristics or most important things, questions that we might have for them to consider as part of their evaluation process. And I think almost 100% of my questions were focused on getting to know who the person is. What are their values? Who are they? I said, you're going to find, my perspective was you're going to find ample candidates who are well qualified to run a credit union and manage a credit union, but can they lead? And do they have the heart for, the credit union movement and what we represent? As part of that process, I actually wrote it was like a 6 or 7 page kind of document about my why. I called it my why. And it really kind of talked about my childhood all the way up to that point and why I do what I do. Because I wanted to know they certainly knew me at a certain level, right? I wanted them to really know who I was as a person. It was one of those things you're a little scary to share sometimes with folks, but for me, it was liberating in a lot of ways too, that it was just all out there in terms of here's the background, here's why I do what I do, having, lived my own learned journey of seeing my family struggle and being parts of that, and wanted to be able to be in a position to help people perhaps avoid some of the things that we did growing up.
were you the first in your family to go to college?
Yes.
Yeah, I assume.
Yep. So first gen student, paid my way through through school with a variety of scholarships and grants. So we were, Pell grants, and here in Texas, they had something called, I think it was called the TPEG, which was basically a Pell grant, a variety of scholarships, and then worked my way through school. Again, I saw it as my way out, right? Kind of how to achieve escape velocity from a life of living in government assisted housing and whatnot, that I just didn't want to, I didn't want to live that way. And nor did I want to ultimately have a family that had to also go through what we did growing up. And again, I know I'm one of millions and millions of Americans who experience the same thing every day. So there's nothing special about me. It's just, that's just who I am.
Well, given that background, though, you seem to have compassion and respect for people in that position, rather than looking down upon them as, oh, that's the others and they're not like me and the people I hang out with.
Oh, that's, I believe that. And I think if you spoke to the folks who know me well and boys here, they would agree. I'm just Michael, right? I respect the seat of the CEO of the organization and what it represents, but at the end of the day, I tell them I'm just another person like you, not any more important than you are, and I just have a different level of responsibility and authority in the organization. Frankly, having been here as long as I do, it's I think as long as I have been, I should say, that I think a lot of folks appreciate that, and they see that even though I'm in the seat, I don't believe I've changed that much from how I'm being, I should say, right? How I'm coming across and who I am as a person. Still connect with folks extensively throughout the organization. I think it's one of the most important parts of the role, if not the most important, right? Is creating, cultivating and creating, strengthening relationships inside the organization so that we're all aligned about where we're headed and people feel good about their work here and who their leader is. They know their CEO. They know what I stand for, right? And whether it's we're always 100% aligned or not, at least know where I stand on important matters to the credit union.
Credit union your size, you need very good people who are reporting to you, who are running lines of business.
Absolutely.
I mean, you can't do You can't run one person can't run a $4 billion credit union.
Oh gosh,
I
no.
don't care how smart that person is, how many hours a
No.
week they work, can't do it.
No. It's all about the team, right? It's all about the team. My job, it's interesting as I mean, you talk to a lot of leaders, right? And you know how one moves from subject matter expertise. And then as if you have the opportunity and the desire to grow in your leadership and with oftentimes a broader scope of responsibility, you become less and less the subject matter expert on anything, frankly. And at that point, it's really about leadership, right? And doing your best to hire the best people, put them in the right roles, and empower them, right? Understand, make sure there's shared alignment around where we're headed as an organization, what we're trying to accomplish, and empower them, turn them loose, right? And I think so much better happens as a result of that. So I'm very much let's align philosophically, and then let's go. Let's go.
Your field of membership is basically universities, right?
Over time, we were founded originally at the University of Texas at Austin, and that was kind of the single seg model, like many credit unions over the years, right? But over time, we now serve 15 plus higher education institutions across the state of Texas, and also very broadly in the communities in which we have branches, which are mostly here in Central Texas, but also in the Houston area as well. And so about 1 in every 5 adults in Central Texas is a member of UFCU today. And so not all of those clearly came from the university or higher education affiliation, but it's because of the brand we have in the marketplace in terms of how we treat people and the value that we provide to members.
Now I'm going to ask you 2 or 3 current events questions. If you don't want to answer them, that's fine. And the reason I say that is that everything's so volatile right now.
Oh my gosh.
I've been talking with credit union CEOs recently about the federal tax exemption. Do you think that is at risk? And if it were to be taken away, what would be the impact on your credit union?
The risk feels more real this time around. It's come up, several times over my 20-year span here, and clearly well before that too, my tenure in credit unions. But this time it feels real, right? I think because of the amount of uncertainty out there, and the idea that tax exemption in any way is under threat to me is extremely concerning, not necessarily from a credit union perspective, but from the people perspective, right? That credit unions, as you know, were given a tax exemption and founded for a purpose, right? And it's really to be that vital financial institution to the people and the communities in which we operate. And credit unions today, I'd say, matter as much as, if not more than they did 90 plus years ago, right? And so I think about Louise Herring, one of the true pioneers and trailblazers of the early movement of credit unions, wrote a chapter in a book, I think that CUNA had published maybe back in the 70s. It's been some time ago, or 80s. And it talks about she talks about interest rates in New York City in the 30, 40, 50% range, or more. And I think about, we live in a world today where payday loans in Texas, those rates are as high as 664%. Title loans are 220% plus. So you own your car. There's very little credit risk, I'd say, to the lender if you're a title lender, yet they're charging people 200+%. And so we haven't solved this yet. And so that to me is the opportunity that we, and the kind of the duty and obligation that all of us credit unions are trying to solve and step into, and yet we have more work to do. And so I wouldn't want the elimination of a tax exemption to in any way impede that. Would it? Some, I think it would, right? I mean, if you lose potentially 20% of your net income, which, as a movement, we invest significant amounts back into the services that we provide, oftentimes knowing that there's not a positive ROI, or the positive ROI is a number of years out from those initiatives, but it's the right thing to do in the communities in which we serve. If we lose that tax exemption, to me, it seems like a real possibility that some of those things might, ultimately people might scale back on some of those things, which ultimately hurts, it hurts people, it hurts the communities, and ultimately, result in a less vibrant America for all people. Yeah, concerned about it. And from our perspective, are we doing anything about it? Obviously, we're monitoring the situation. We're talking about it, but we don't have a playbook yet. Frankly, it's not something I want to put energy into until we know with a bit more certainty around this. And I think if and when that comes, then I know our board of directors and the senior leadership team will quickly get in a room and assess our paths forward, and with the help likely of others in the industry who've done the work, and we'll do what's best for our membership.
NCUA, what's your sense of what's happening there? And if you say I haven't a clue, I'd say neither do I.
That's probably fair, right? I think I know we both read the headlines, and obviously very fresh news regarding the removal of 2 of the 3 board members. And what in the world does that mean? There's obviously a lot of talk about, is this the prelude to a single regulator, which again would be of concern if we don't have a unique regulator who understands, or at least we're not regulated in a way that recognizes the uniqueness of credit unions and has the appropriate kind of risk parameters and risk profile around that. And so, again, I don't know what's happening there, but that too is concerning. Something we're clearly monitoring, and I know many are in the industry. And for me, I don't have a strong perspective yet, other than whenever you create uncertainty in the regulatory environment, regardless of industry, it likely results in organizations pulling back from some of their core activities because they become more risk averse as a result of that. And again, it's at a time when we know that the average consumer remains needs credit unions. What none of us want, myself and other leaders want, is for credit unions in any way to stop providing the vital services that we provide to people and communities that we serve.
Now let's switch to what got me interested in talking to you in the first place, your strategic plan. Why did you need a new strategic plan?
The need for us for a strategic plan really is about clarity. It was, how do we, this credit union, again, like many credit unions, right, probably all credit unions, had a reason why it was founded. And over the years, the core principles of that stays the same, right, in terms of people helping people. But as we move forward into the day and age that we are now, how do we continue to live out that focus on helping people in a world where the customer experience has been disrupted, business models have been and will continue to be disrupted by rapid changes in technology and consumer expectations? How do we build an organization that is focused on essentially thriving in the future, becoming future-proofed, and also figuring out for us where we believe we can make the biggest difference in terms of people's lives? And so, say, essentially winning. Where can we win? And I don't mean that we win accolades or we get to pat ourselves on the back because of what we've done, but meaning we're providing exceptional value. Our value proposition is so exceptional that people want to be part of the credit union as a result of that and stay part of the credit union.
Now, who do you compete with?
Frankly, it's anybody who's in financial services, right? So I think we compete with, from the largest of the largest big banks to the fintechs to alternative financial providers, right? Whether it's payday lenders or car title services, right? Which frankly, until they're out of business, means we haven't fulfilled our mission as credit unions, frankly, or at least that they're offering rates that are similar to what we offer in the marketplace.
I don't think that's going to happen.
I don't think so either.
I wish it would, but I'm not optimistic about that.
No, that's why I think we as credit unions have to continue to become so compelling that folks won't even consider those alternative services or have to do that, right? That we're able to do that. And ties back to our tax exemption, right? That utilizing the tax exemption that Congress granted us all to serve others, take on more risk, perhaps, in some of our lending and other activities that other institutions won't or will charge exorbitant rates for.
Now, when a member joins you, why?
It's a variety of reasons, right? I think for us, we've got great brand recognition, and I think the word of mouth continues to be the number one source of new membership for us. And we ask people that question all the time, why UFCU? And usually it is because they know somebody who's a member, and they've heard great reviews. We hear the word love a lot. People love love UFCU, or they've interacted with member or employees in other formats, right? And so I think it's really about the brand and the brand promise that we have that draws people to the credit union. And we're also, I think we have our products and services and how we do it. Our business model is an approach I think is also appealing. We don't do indirect lending. Nothing against my brethren out there who do that, but we only directly lend to our members. So we want to be the ones who help them buy that first auto loan or car, right? Or help them refinance it or their future cars. Because for most people, it's the second largest purchase they'll make in their lives. And same thing on the mortgage lending side, where we're the largest mortgage lender in Central Texas and one of the larger from a credit union perspective across the country because of what home ownership means to people, right? It's the largest purchase and it's also the greatest wealth creator for most Americans. And so those stories that people see the authenticity of what we do, and then the experiences that match that. Not saying we always get it right. We try to obviously strive for excellence in everything we do, but we do fall short clearly at times, and hope to recover from that. And we've built quite a bit of loyalty as a result of that.
How robust has your mortgage lending been in the last couple of years? And I ask because most credit unions have downsized their mortgage department.
Yeah, we've gone from our mortgage production today is roughly 30% of what it was during the pandemic, down significantly, and that is representative of the market that we're in as well. So I think we've been able to maintain our market share, but there's just a much smaller market for mortgages. So clearly, but it's an area that we're committed to. Our goal is to be a top 10 mortgage lender amongst all credit unions nationwide. And so we are committed and we're building out. We're investing. We're adding loan officers. Done a tremendous amount of, let's say, operational transformation work within our mortgage operations to prepare ourselves for when the market turns, and it will at some point, so that we're well positioned to be the lender of choice when people go to buy a home.
Now, if your goal is to be in the top 10, where are you now?
I knew as soon as I said that you were going to ask me that question. So
approximately.
Okay, I'm gonna guess at this. Our chief lending officer is probably when she hears this, will probably come and kick me in the shins. But I think we're top 50-ish at this point. Our peak at one point was 27, I believe, and that was for a credit union at the time who's on an asset basis was barely in the top 100. We were number 27 in terms of our mortgage volume, and most of that was purchase volume too.
Now, Texas has had a modest priced housing market, Austin being a dramatic counterexample to that.
Mm-hmm. Mm-hmm. Right.
Is it still modestly priced?
Yes, I'd say relative to other parts of the country, much of it is. I think the urban areas, large urban areas, have become affordability remains is certainly an issue. It's become more so, especially which was exacerbated during the pandemic as people flocked to some of the southern states and states that were open for business, so to speak, where they could live their lives the way they wanted to. And we saw home prices increase significantly here, which actually priced out a lot of folks from the market. So I think you're seeing more and more people in the urban cores moving out of those urban cores. I know it's a real issue here in the Austin area. I haven't verified it, but I did hear that the city of Austin's population shrank last year for the first time, and who knows when, but the metro area continues to grow. So it's indicative of people moving out of the urban core to the suburbs where it is much more affordable. So
in the strategic plan, how did it change from what the institution had been doing?
What I would say is under my predecessor, and I'm sure it was true of his predecessor as well, is we've been focused on, again, people since our founding, and I'd say the real focus on purpose. And in the mid 2010s, we focused. We worked with the board, strategic field facilitators to step back and ask ourselves, where are the opportunities in the marketplace where UFCU, where there's a need for financial services, where we can make a difference, and where are strengths that we can lean into. And after pursuing that path for a number of years, what really is culminated, I'd say, and is in the strategy now that we have, which is, again, focused on the member at the center. visualize a Venn diagram with three circles. Imagine the top circle is purpose. So it all starts with purpose. The second circle, if you're looking at it, would be to the left of that would be possibilities. So what are the possibilities you can explore once you've defined your purpose? And then the right side circle, bottom right, would be performance. And in the middle is people. So that's a model that we use here at UFCU. We try to operate where those three circles intersect, where people are. And as we're making our decisions around and where we're guiding our efforts about, where can we best win? And so we're very focused on, being the best omni-channel consumer banking experience for members.
How close are you to succeeding at hitting that goal?
Most transformations of organizations, research says 7 to 10 years. So we're really 2 years into this. I'm very pleased with where we are. I think to see the team's reaction to the new strategic plan that was rolled out organizationally around this time last year. So we're really about 14 months into the new plan, and reception has been exceptional. People have really appreciated the clarity, the transparency of it, putting the member at the center. For a lot of folks, when they read it, and they heard it, they said, well, this is what we're already doing. It's like, well, so that said yes, and to a degree, but we're not doing it consistently enough. So if I were looking at this from a progress perspective, I think we're doing well. We've seen our member growth numbers increase from 4.5% or so organic growth to this year we're up over 6%. It's all organic again, no indirect at all. And so we're seeing great reception in the marketplace, and that puts us in our peer group, and I think in the top 5 from a growth rate perspective nationally. And I'd say it's working, but it's a work in progress. And again, I'm proud of the team that not only the executive team clearly that's really executing on the plan, but the broader organization who's making it happen.
Why do you do no indirect lending?
It's really a philosophical choice. My understanding, I was not here when the decision was made to exit indirect lending, but from those I've talked to who were here and actually made the decision, was that I think it was originally prompted by, frankly, financial losses that they were experiencing at the time in the late 90s. Over time, it's really become an ideological or philosophical approach of, we want to, again, being most people's second or largest purchase they'll ever make, is we want to be in a position where we are equipping people before they go to the dealership, that they understand, the car buying process, the potential pitfalls that one may experience there, and equip them to navigate that process well, get them a buyer's check in hand so they can walk in like a cash buyer essentially, and buy the right car at the right rate with the right protections. And so for us, it's all about that education piece and then equipping them, empowering them, right, to make the right decisions. And so, to me, indirect lending is really a form of investment, right? It's not a member growth strategy, frankly. It's really investing in auto loans, right, that you're getting directly from a dealer. And so for us, it was removing the person in the middle from that transaction and going directly with our members. And that's a philosophy that continues to this day.
Well, if I'm a salesman at a car dealership, my goal is to get you in a 7 Series BMW. It could be your wallet and your family finances say that a nice Hyundai with a 10-year warranty would be a much better purchase at 25% of the price, something like that.
Yeah.
But I'm not going to mention that to you. No way, no how.
No, that's not their incentive, right? I mean, most folks I talk to, when I ask them, do you know what percentage of the profit in a dealership comes from, on average, from the sale of the car? Most people think it's 100% or most of it. And research that we've seen and read is 20%. So you have an auto dealership whose business is built on 20% profit from the sale. They make 40% on service. The remaining 40% is made in the finance and installment office, the F&I office, they call it.
Oh, absolutely. When I was a kid, when you bought a car, you dealt with the salesman, and that was that.
now you finish up with the salesman, then you have a whole new session with the finance manager,
Oh yeah.
which always involves you're walking out, you're buying all these great protections, man. but suddenly the monthly payment has gone up by a third.
No, I tell you, it's just not to maybe a sidetrack or sidebar conversation, but I think I recall, I don't know, 10 years ago or so, I was at a dealership buying a vehicle, and of course I go to the finance office. They know at that time that I work for a credit union, and they still try to sell me I think the extended warranty program, and the price they quoted, which was about double what I'd pay as a member of UFCU. And I told them no. I said the credit union's got a much better rate than that, and of course they wanted to know what it was. I said, well, I'm not going to tell you, but you're welcome to keep pitching my business. And so eventually they got to the same price that we were. But I said, the fact that you didn't offer it to begin with, I'm going with my credit union, and I would anyway because my loyalty to them as an employee. But regardless, is that you're going to charge me twice as much for something you could have sold me at half the price.
Well, that's the insulting thing. I'd be really irritated.
Oh,
if I go in and the guy says, "Well, that'll be $100," and I said, "Geez, I can get it for a lot less," and then he also offers me 50. I'd say, "What's going on here?"
Yeah. And of course, this was in the thousands of dollars, right? So you think about folks who go into the dealership who don't understand that. You see them getting taken advantage of, and I think the other thing that we do, of course, we do auto refinances too, and the interest rates that we see, Robert, are unbelievable. I know, and I don't know if this is true in other states. I imagine so, but for a lot of folks who come to us and with a non-prime credit score, the average interest rate typically we see are in the 20s, and we're able to refinance people. The average savings, if somebody refinances their car and has a subprime or non-prime credit score, is $4,000 over the life of that loan. So you think about the ability to create savings for somebody. It's kind of odd to think about you can create savings in a loan, but frankly, you can. And so we think about the role that we play there at other credit unions too, how important it is that credit unions are here to help for those who have already purchased a car, perhaps at terms that aren't market rate, that we can fill that gap for them and that void that otherwise would exist if we didn't exist.
Now, how involved was the board in your strategic planning?
It was a collaborative partnership with the board. We've got a fantastic board, many who come from, it's a great blend of some from academia, but some, many from outside of that too, who are very experienced in business. And so our process really was first align around what we're trying to accomplish from a purpose perspective. So it started with first outlining the potential purpose statement, and then it was an iterative process from there as we shared our purpose, and then from that became the values that we're going to have as an organization, and then lastly was what's our aspiration we want to achieve as an organization. And so that really drove the process, and it was a very much a collaborative, iterative process with the board, and we wouldn't have the quality of frankly of strategic plan and thinking without them.
Yeah, sometimes I think the boards aren't that involved in this process, and I think they really should be involved or have to be involved. But a lot of strategic plans at credit unions never go anyplace. I think it's like a scholastic exercise rather than a to-do sheet.
I agree. I've seen those before, and I think our thing was how do we don't have a 25, 30 plus page strategic plan. That was not the intent. It was how do we keep something simple so that people understand it and so we created what we call our strategic framework. So it's strategy on a page, and you can see from the very top of that page is our purpose statement. At the very bottom of the page is how that all translates, kind of cascades down to the annual operating plan. And so that the organization has, visibility and clarity into how the things we're working on in any one year tie back to our longer term measures, our imperatives, which are then all derived from our aspiration that we're seeking to become. And so I think that's really helped with again, that kind of alignment and clarity perspective of where we're headed. And it gives us a great decision-making framework. And as a board, too, as we're evaluating opportunities for growth and changes, we're able to go back to our framework and say, well, how does this fit within the context of our framework? And if it doesn't fit, then all right, is it time to update the framework as a result of this? Or is it time to say we're going to pass on that opportunity because it doesn't fit?
Now, if I walked around a branch or if I walked around the corporate office and buttonholed people and said, tell me how this institution is different from JP Morgan Chase or Bank of America, take your choice. How many would give me an answer that you'd like?
I'd like to think, and I think, and I do believe it, nearly all of them. We have several, former large bank employees at the credit union working here, and I think they'll tell you they're here because it's the difference, the people, it's the focus on people. And as culture, it's all about culture, right? We can have the best strategy in the world, but if we don't have the right culture, we're not going to succeed. And so, what we're trying to do is have a great strategy and an equally great, if not better, culture, frankly, to make that happen. Because at the end of the day, it is people who make the strategy come to life.
Do you hire people from outside for senior level positions?
We do. It's a blend of roles. We've had internal promotions and hiring from outside where we believe we need the talent or skill set that isn't possessed with inside the organization at that time. We have an intense focus on internal development, growth for our employees. About 50% of our employees of our open positions are filled internally through promotions. And this isn't going from a level 1, level 2. It's somebody moving truly into a higher level of responsibility or another role that also indicates that too. So if you look at our executive team holistically, there's a good blend of several of us who've been here for quite some time, and then some newer folks on the team as well. I'm proud to say we had our chief retail officer who just left us to become the CEO of another credit union, came from banking, and we were his first credit union role. And so somebody who'd spent his career in banking came in, really fell in love with the credit unions and what we represent. Now he's a CEO. So to me, that's a huge success story. And so grateful. While we'd love to still have him here, I'm just glad he's still within the credit union movement. Our chief lending officer comes from large banks as well, and she's absolutely exceptional. And she's here because she could choose. She chose to be here because of the vision we have, the purpose of what we set out to do, and how we do it, and kind of who we are essentially at the core, and how we make a difference in people's lives.
Look at yourself. I mean, you came out of college saying, geez, I really like to make some money. I never had any money. Yeah. So my money is my God. And after a few years, you said, geez, maybe I'd like some other things in my life. So
yeah, no, that's a good point. I've lived it, right? I think I'm very fortunate that I've had the opportunity here, and I had some great mentors and leaders that invested in me heavily here at UFCU and allowed me the space and time to help make that transition from a focus on just focusing on my skills, right? But also then rounding that out from a leadership and a purpose perspective. And I owe them immensely for the contributions they've made to my journey and my leadership, which I would hope are continuing to benefit the organization going forward.
How many years ago was it when the thought came into your mind, someday I could be CEO of this organization, and I think I'd like to?
It's so if we go back to early 2010s, when I became CFO, I really thought at that point that I would just retire from UFCU as CFO someday. Like, I really like what I'm doing, and I like the direction we're headed. And for me, it was I got to a place where we had a great finance team, highly engaged, highly talented, and we were doing really good things. But I found myself, continuing to evolve my role and asking myself, well, what can I do now? And so to create space for them, it also meant, me continuing to elevate. So I had the opportunity, and I talked to the CEO and other leaders here about I really like to continue to grow my leadership and expand into other parts of the business. And one of the areas that I was really interested in was digital banking and the impact that fintechs were having on credit unions. And so I had the opportunity to lead that. So I was a CFO who also had responsibility for digital banking and payments, which is kind of unusual, but it really was the beginning of a journey toward getting closer to the customer for me. And as I did that more and more and started developing a vision for the member experience, it really became, I think I'd like the opportunity to be in a CEO role so that I can bring forth my vision for member experiences and for the impact we can have as an organization. And so, say that was probably, I guess it's been about 10 years ago now or so that seed was, I guess, in my mind, and over time it's just been cultivated and grown through my experiences. And I'm really fortunate that the CEO who was my predecessor gave me opportunities to continue to grow and learn and, help me better assess, is this something I really want going forward or not? And the more I did it, the more I enjoyed the opportunity to help provide and lead the direction of the organization in conjunction with the board.
It's very odd that the CFO's portfolio included digital banking. I've never heard that at an institution. Maybe a really tiny one, but not a big one.
Yeah, well, Robert, as we started out, right, you talked about my career path, right? It really wasn't a straight line from where I started to where I am now, and I think it's indicative of me in a lot of ways. I like to learn. I'm curious, explore new areas, and I think part of that too is continuing to challenge myself to continue to grow, and so that often means finding new opportunities or new areas in which to grow into, right? Which allows others then to come in behind you too, and sometimes when you have great people, as they're wanting that, right? So they're actually kind of pushing you along too to continue to lead them in a way that creates space for them to grow as well.
No, that's very cool. Basically, you were given the best young horse in the stable to ride, and you seized the opportunity. But you were given that this digital banking was the place you wanted to be.
Yeah, I was fortunate. That's for sure. And we've had our bumps along the road there digitally, but I feel really, really good about where we are now from a digital capability perspective and what's going to come in the next couple of few years as we take advantage of the investments in talent and technology that we've made over the last couple of years. I think this is just the beginning.
Is this your final job?
That's a great question, Robert. Well, all your questions are great. I think for me, it's really I don't know. I'd like to think that I'll perhaps retire from UFCU as CEO, hopefully many years from now, but I don't think I'm done, right? I really don't think at that point it would be what's next for me. I'm not somebody who has a lot of hobbies that take me from, I don't golf, I don't play tennis, I don't do those things. And so I like the work I do because of the impact we have. I like I like connections with others, spending time with people. Hard to imagine myself not doing that. So how's that for an indirect answer for you? I guess the maybe the best way to say it is, I don't know, right? I don't know what's in store for me. I don't know where this path will lead.
You're a good interview subject because you endeavor to tell the truth. You don't necessarily just have a pat answer that you shovel out, which makes the process more interesting. I hope more interesting for listeners too, because you're hearing something that's honest, even if it's a little uncertain. It's honest. Because life is full of uncertainties.
Yeah, I appreciate that. I think it's one of the things for me along the way. Again, another investment that UFCU made me was with an executive coach. That pretty intensive program, 24-week program, about 10 hours a week of work, various assignments that every Friday got on a phone call with a coach and reported out on those things. And one of the exercises that I underwent as part of that was defining, he said, Michael, who are you? Like, what do you mean who I am? What do you mean? Who am I? Like, what are your values? What do you stand for? And I remember the set of values I provided to him at the very beginning of the program. And then we came back to it near the end, and it was, okay, now that we've gone through all this, let's try this again. Because I don't think the values you provided, really those things aren't values, Michael. So they were things like family, friends, fun. Yes, one can certainly value their family, right? But that's not necessarily a family is a noun, right? And so, like, who are you? Like, who do you strive to be? You know, and I think if you ask most folks, they don't really know their values. And so I'm thankful that I have my values that help guide me, and I think it's that purpose. And so part of that, you know, is this my last job? I don't know, but I would like to think is that whatever I'm doing will be based on, again, anchored in my values and making a positive difference along the way, and me continuing to learn, but also leveraging now the decades worth of experience, which that sometimes it's hard to even get that out of my mouth and believe it's been this long that I've been in the professional world now, 30 plus years.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey again. That's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.